Welcome to the Mortgage Note Podcast. We're speaking with Gagan Sharma, CEO of Texas-based BSI Financial Services. Can you give us an overview of BSI and how you came to be involved with it?
BSI was a company and a business plan that I was working on when I was doing my MBA at Wharton. This is my second entrepreneurial venture. I founded my first company in the late 90s, built it, sold it. I actually founded that company in my first year of business school, and I dropped out of school to build and run that business. And then I sold it, and then I went back to business school to finish my MBA. In my first company, half my business was working with mortgage companies. So when I was looking to get back on the entrepreneurial path, mortgage was the industry that I felt was interesting. I've always had a interest in finance, and so BSI, as we started, it was a business plan to acquire and get into the mortgage servicing business. And that was in late 2005, so almost 20 years ago. And over time, BSI has evolved from essentially a sub-servicer and a specialty servicer into a broader mortgage platform where we are typically serving either lenders who make loans or investors who buy or invest in loans.
How did you come about being a business that services both? That seems a little different.
Yeah, if you think about it, right, when I first acquired the BSI platform, our business was more in doing servicing for lenders that made loans. So we were acting as a traditional sub-servicer. And this was before the financial crisis. So that was your traditional sub-servicing business model. And then, post the financial crisis, there was a large need for specialty servicers that could help investors that were acquiring loans. Oftentimes these were loans that had some element of delinquency, and we as a specialty servicer were coming in to help our investors, work with borrowers and do workouts and what have you. So it's and we have basically retained those two segments of clients as we think about it. Is lenders that make loans have always and continue to be a large portion of our business, and then investors that acquire loans. And that's just continuing to be in the DNA of the firm.
And what makes BSI stand out among other finance or mortgage servicing companies?
I would say a couple of things. One, I think we are creative problem solvers, right? That oftentimes our clients are looking for a certain solution. And oftentimes, we'll solve their solution using technology. So we think of ourselves as a fintech platform where we, use technology. Sometimes we build it, some technology we buy that may be available off the shelf. But for us, using technology to be creative problem solvers for our clients. I mean, that's what I would say really differentiates ourselves, that differentiates us from some of our peers in the marketplace. We also are able to help the clients when they have unique needs and changing needs, right? Our industry is always changing, right? Given what happens to interest rates and broader environment. The industry is constantly changing. Clients are looking at new opportunities, new products. And so we then end up becoming a partner, not just a vendor to our clients.
What sort of clients do you attract and why, and what is best for them to have when they sit down at the table with you?
we typically work with, the mid-size, small to mid-size market. We have a few large ones as well. Um, and Especially if they're working on unique products, home equity investment contracts, or business purpose loans, or these days we are seeing a lot of interest in home equity lending, right? Both closed and open-ended home equity lending. Uh, we're typically looking for, an understanding. The client has defined the product, has a sense of what they're going to do with the product, what their distribution strategy is, what their scaling up strategy is. And like I said, we tend to be a fit. There are clients that we work with from when they were startups, because we believe um, in the strategy and the scaling up that they have planned. And then as they grow, we have grown with them. Our relationships tend to work well where it ends up being a partnership, with that organization itself is looking to grow, and how they're looking for someone to partner with them. We also have a business to acquire mortgage servicing rights. So we're looking for people who maybe, obviously they're looking for the right price, and we're looking for the correct economics as well. Um, but it's broader than that. We have, for example, in our sub-servicing business, we talk to our originator clients to be their single point of execution for their servicing assets, where, if they want to sell us some servicing, we'll buy it. If they want to work with us as a sub-servicer, we can do that as well. So I would say, that general theme of partnership and long-term partnership typically has been a theme of how we have worked with our clients.
And I also understand that you do financial servicing of home equity loans and home
Mhm.
equity lines of credit. What is your involvement of that, and how does that work with BSI?
Sure. So, one part of it is doing, traditional servicing, sub-servicing on behalf of our clients. So our clients are originators or investors that may either be originating those home equity loans, or they may be buyers of those loans. And so we act as a traditional servicer slash sub-servicer of those assets. The other way that we also participate in the market is, for the part of the portfolio where we own the servicing rights, we also offer home equity products to our consumers, to the borrowers whose loans that we service. So if the way to think of our book is, there is a part of the book that is third-party servicing. Obviously, we don't solicit those borrowers, but for the portion of the portfolio where we are the owner of the servicing, we offer those borrowers home equity products, both home equity loans as well as HELOC products.
And where do you see BSI's place in the world of finance, and where do you see the company going?
So, we spend a lot of time thinking about it, right? What's our, vision? What's our purpose almost, right? Um, and, after a lot of thought, the way we would define it is, we are really passionate about home ownership, but it's also our role is in what we call fostering sustainable home ownership. But uh, you know, we want home ownership where it is sustainable, whether that's as a servicer or a lender. We want to make sure that the borrower, the consumer, uh, who is the customer who's in the home, we can make it into a sustainable home ownership experience for them. And how can we foster that? Through our different businesses, through the customer experience that we deliver to them, through the use of technology. But ultimately, all of that is in service of the mission of fostering sustainable homeownership. And as we look forward, right? Today we may be touching 250,000 families. Our goal and is over the coming years, we believe we have an opportunity to significantly scale that up. So we want to double and our business and more, because we think that our combination of different businesses, we can provide a great value add solution for all our customers, whether they be our borrowers or whether they be our lender or investor clients.
Now, I understand that you're also involved in shared equity loans, in the shared equity, area of a mortgage. Can you explain to me, like I'm maybe in the fifth grade, what that means and how BSI is able to do that and what it means for the consumer?
Sure. So those are shared equity investment contracts. So they're not loans. And the way to think about it is, I actually do have a seventh grader, so I'm going to try to do what you asked me to do, is to explain like a fifth grader is if somebody owns their home, they can sell effectively just like people sell shares in their company. A home equity investment is effectively something similar, where people buy shares in a home, right? So just like you can go buy a share in a public company, or you can go buy a 10% share in in a hotel or in a piece of real estate. People are bringing that concept to the individual consumer who may own a home. The benefit of that is that there is no repayment, right? That there are nuances around how different companies may be offering that product, but the key construct is people get to take some money out for whatever needs they may have from the equity they have in the home, without having the need for a repayment. And there are different use cases that one can come up for that. Our involvement has been as a servicer. And again, here it's less about processing payments because there aren't any repayments, but typically making sure that the home is in good condition. If there are, if the customer takes another loan, how that impacts the position of the home equity investment contract. In case there are any adverse things that happen to the home, making sure that we stay on track for that. If the customer sells their home, making sure that the right amount of money is received and then obviously remitted to our client. So we end up servicing the asset, but what servicing the asset means is slightly different for the home equity investments.
We're into the year a bit now, so we can get a better read on 2025 than we could just a couple of months ago. How do you assess the current housing market, be it in the Southeast and even the country's trends, and how does it compare from 2024 conditions? And building off of that, where do you see it going, perhaps the rest of 2025?
So I think the biggest thing that I focus on is rates, right? Where are mortgage rates at? They went to 7 and higher, and now they seem to be coming down a reasonable bit. And I think interest rates is probably going to be one of the biggest drivers of what happens to housing. If rates stay in the 6.5 to 7 zip code, then the trend that we have seen that people who have a 3.5, or a 4% mortgage don't want to come out of that to go into a 7% mortgage. So I think there is some amount of people who are staying in place because of rates. The other thing that we are starting to see is people who rates have been relatively higher now, almost for 2.5 years or 3 years or so. So somebody who locked in their rate maybe in 2020, and now it's almost 5 years. They may have a life change event, right? Family expanding or contracting, and they just need to get to a different housing situation. So there is some amount of that is just naturally going to happen. We have heard in certain places, in certain price points, where markets are not going up, and in certain cases borrowers or sellers are having to make some concessions. But then that gets much more into the local market. Like, I'm in Dallas. The Texas market in general has been doing very well. Right? Companies are moving in, people are moving in, so there's a lot of demand. In other parts of the country where the local economy may not be as strong, I think housing is going to be more negatively impacted, right? Because you don't have a demand source and you have higher rates, and that becomes more challenging. So I would say that the state of the local economy is one thing that I would look at, and the other thing obviously is the macroeconomic interest rate picture that one has to keep looking at and observing.
On a personal note, what is your background, and how did you become involved in finance?
Great question. So I'm an engineer by training. I grew up in India. I did my engineering in India, and then I came to the U.S. almost 30 years ago. I worked as a consultant with Deloitte, and from there I went to business school. And during business school is when I had the plan of creating my first company. I've been an entrepreneur now the last 25, 26 years. I've been an entrepreneur most of my life. The way I got in the mortgage business was I've always had an interest in finance. I've always found it interesting. An engineer, I'm a math person, so the numbers aspect of finance comes naturally. But I think it's also that I find finance plays a critical role in all aspects of the economy. Like now in the housing finance system, we may be talking about the housing market, but you can't think of the housing market without the housing finance ecosystem that underpins all of that. So I've always had an interest in the finance side of the business world. And the way I got into the mortgage business was in my previous company, half my business was mortgage clients. So when I sold that business, because I always had an interest in finance, and I understood mortgage, so I decided to go deeper into mortgage.
And when you wake up in the morning, what gets you excited about your type of business, and you're like, all right, let's get that day started?
Every day there is something new, there is something challenging. The act of every day going in, doing problem solving, working with people, I'm blessed to have a great group of people that I work with. So every day it's like, okay, let's go and let's go climb the next mountain, the next challenge, and conquer the next challenge. And it's just personally, I am driven by, always pushing myself to do better, um, seeing what more I can do, because frankly, I don't believe I know everything that I can do. So I challenge myself every day and say, okay, can I do something better tomorrow? Um, and, and let's see what I can do better today that I didn't do yesterday. So I think it's an aspect of challenging myself every day, that gets me going about business. Right, our business is always very fast changing. So the inherent, if I may say, volatility of our business is the challenge, but that's also what makes it interesting. That there isn't a dull moment in our business. And yes, sometimes that brings stress and challenge, but I think I enjoy the challenge, the intellectual challenge, the people challenge, frankly, challenging myself, to see, okay, what can I learn from yesterday? What did we do? What could we have done better, individually, collectively, as a group, as a firm, as an industry, and apply that. Like, and every day you get up and you try again. I almost think of it like an athlete, right? An athlete every day gets up and says, okay, what plays did I run yesterday and what can I learn today? And I approach business almost with that approach that, hey, I'm an athlete, maybe I played well yesterday, maybe I didn't, but either way is what am I going to do today? And even if I won the game yesterday, doesn't matter because tomorrow is a new game. That's the approach. And that's what gets me going.
We have been speaking with Gagan Sharma, CEO of Texas-based BSI Financial Services. Join us again for the Mortgage Note Podcast.